Hey Puppy Trades, I wanted to do a video analysis update on the stay-at-home stocks. We're going to talk about Peloton, Alibaba, Zoom, Amazon, Wayfair, BJ, and Netflix. We've already talked about Netflix a lot. We're also going to be using this video to test out some audio enhancement so that audio is not a distraction in this video. We had a little bit of an audio problem in the last video. We're going to throw this video into iMovie, add voice enhancement, and I'm going to try to keep my voice at the same level in this video so that audio is no longer a distraction. Okay, but first I want to comment on this tweet real quick. I said, how do we know that SPY will hit 460 this summer? Well, pretty simple. Tesla, PayPal, and SOXX, they formed the exact same bull flag from the March low to the September high, placed at the September low. Okay, so if we look at SPY has this exact same bull flag that Tesla and PayPal have and that SOXX have. It went from the March low to the September high, placed at the September low. Okay, so we see now SPY is breaking out of this bull flag. We'll talk about a possible back test scenario and how we're going to use oil stocks in the oil sector to time this back test if it happens. But let's look at this real quick. So we see Tesla has the exact same March low and the exact same September high and the exact same September low. If we take the length of the March low to the September high, placed at the March low, Tesla has already gone to what we call the bull flag equal legs target. It's actually past this already, okay? This is no surprise to us. I tweeted back in November when Tesla was breaking out, I said this is a gorgeous bull flag. Tesla is definitely going to go to 764 conservatively by March. We know that because that is a very simple bull flag equal legs target. We take the length of the first leg of the bull flag, we place it at the low of the consolidation, and that's how we get our price target. Okay? It's not just Tesla. PayPal did this exact same thing. So way back in November, I tweeted that PayPal also had a beautiful bull flag. If you took the March low, connected with the September high, and placed it at the September low, PayPal was going to go to 305 within 5 to 6 months. Okay, if we look at PayPal, PayPal has already accomplished that exact same feat. Okay, so what's going on? PayPal and Tesla are acting as leading indicators for the stock market. As PayPal and Tesla go to their relative price targets, we can expect the S&P 500 to do the same thing in the future. That's why we always say, if you want to know where the S&P 500 is going, you don't look at SPY. You look at important components of SPY. You look at important components of the stock market. That's why we talk about oil so much. So Tesla and PayPal, they've already gone the length of the March low to the September high, placed at the September low. PayPal has gone the March low to the September high, placed at the September low. Even more interesting, SOXX, this is an entire sector, an entire ETF full of semiconductor stocks, has gone the length of the March low to the September high, placed at the September low. What's that mean? Well, these stocks are leading indicators, okay? So if we look at the S&P 500 SPY, we can see this exact same bull flag from the March low to the September high. If we clone this tool and we place it at the September low, if SPY does what PayPal, Tesla, and SOXX have already done, then it is going to reach 460 and is going to reach 460 this summer, okay? I've been on record. I don't think that's going to happen in a straight line, okay? If we're only looking at SPY, which I always say is the worst thing you can do, but if we're only looking at SPY, I expect at some point we are going to break out of this bull flag. We are going to back test this bull flag. Now remember, corrections in Elliott wave theory are not guaranteed to happen. So we should not short when the median of this pitchfork is reached. Okay? Also, I want to be very clear. I will be using oil, XLE, and crude oil. We'll look at those charts in a second. I will be using oil to time this potential back test more so than I will be using SPY. But if we're only looking at SPY, which is a horrible idea, we have a gorgeous pitchfork found by taking this low, connecting it with this high and this low. We have great reactions on the median of this pitchfork, great reactions on the lower bound. Now we are reacting off the lower bound. We are heading back to the median of this pitchfork. So the ideal scenario is that SPY will reach the median of this pitchfork. It will break out of this bull flag. It will back test this bull flag, and then it will take off to 460 this summer. Now, I've been very clear. I don't care about SPY at all. I only look at SPY because I'm a guru. People want to know where I think SPY is going to go, so I tell them. What's most important to me is where is XLE and oil going? Where have Tesla, PayPal, and SOXX already gone? Okay? So we look at XLE. We have a gorgeous wave 1 and A, B, C correction puts in a great wave 2. The minimum wave 3 target, is 51, and the median of this pitchfork is going to act as a magnet for wave 3. We have a great reaction on the median. We have a great reaction on the median. I'm expecting that this pullback, this back test of this bull flag on SPY cannot happen until 51 or the median of this pitchfork is reached in XLE. Okay? So yes, I do think SPY will reach the median of this pitchfork. What's more important to me is when XLE reaches the median of this pitchfork, when XLE reaches the wave 3 minimum target of 51. Now, why do we talk about oil so much? Okay, we look at crude oil. This is extremely important to understand. In Elliott wave theory, wave 1 is at minimum the length, wave 3, I should say, is at minimum the length of wave 1. Okay? Wave A and wave C are at minimum the same length. So as I should say, wave C is at minimum the length of wave A. Wave 3 is at minimum the length of wave 1. Okay? The longest in Elliott wave theory, the longest that a wave C can be is 161.8% of wave A. If wave C goes further than 161.8, then it's not a wave C, it's a wave 3. So let's talk about what I mean really quickly. Well, when we first had this rally from this low in crude oil futures, this was clearly a wave 1 or a wave A. We had a classic correction, an ABC correction, to put in a wave 2 or a wave B. So we knew at the very minimum that crude oil had to go to 52, and the furthest that a wave C could go and still be a wave C was 161.8% of wave A. So to be clear, we did not know for sure until recently that this was a wave 3. It could have been a wave 3 or a wave C. If it was a wave 3 or a wave C, it could not have gone past 55. The furthest that a wave C can go and still be a wave C is 161.8% of wave A. Well, what happened? First, crude oil reached the equal legs target, and we saw a reaction. So that's another reason to understand why it's so important to know your equal legs targets, because even if the stock market keeps going, or even if your stock keeps going, it is expected to have a reaction at the equal legs target at some point. That's what happened, okay? So up until this time, this still could have been a wave C. But what happened? We blew past the 161.8% extension of wave A / wave 1. What's that mean? Well, that means that this isn't a wave C. This is a wave 3. This is a wave 1. This is not a wave A. This is a wave 1. This is a wave 2. We blew past the 161.8% extension of what could have been wave A. So that means it's not wave A. It's a wave 1. This is a wave 2. We are completing, at some point, we are going to complete this wave 3. I don't think this wave 3 in crude oil futures has been completed yet. I don't expect it will be completed until XLE reaches the median of this pitchfork. At the very minimum, XLE has to reach 51. Okay? So if we look at crude oil, we can see it is definitely within a wave 3. Well, what's that mean for the stock market? What's that mean for crude oil? If it's within a wave 3, at some point it's going to complete this wave 3. It's going to consolidate into a wave 4. And then what happens? Well, wave 5 in Elliott wave theory is at the very minimum, wave 5 is the length of wave 1. So that means that even after this wave 3 completes, we're expecting a very shallow, mostly sideways wave 4 correction, and then crude oil is going to go the entire length of this wave 1 placed at the low of wave 4. That's going to take crude oil futures, a barrel of crude oil, into the 70s. Okay? So we have much higher to go in crude oil. We have much higher to go in the stock market. The ideal scenario right now is that when XLE reaches 51, or the median of this pitchfork, then the S&P 500 around that time will be near the median of this pitchfork, and that's going to be our signal to prepare for a possible back test of this bull flag, to have a cash position ready to buy this dip. Now remember, corrections in Elliott wave theory are not guaranteed. Okay, so no one should short this possible pullback. Okay, let's get into the stay-at-home stocks and talk about something called sector rotation. So whenever the stock market sells off, it's either a correction or it's the crash. If it's a correction, what you need to do is find out where is the money flowing into. We call this sector rotation. So if we look at this possible pullback scenario for SPY, we have to ask where is this money going to be flowing into? Okay, we call this sector rotation. Whenever the stock market is red, you need to go find out what stocks are holding up the best, what stocks are getting this money. Okay, this is called sector rotation. It looks like at some point when SPY reaches the median of this pitchfork, when XLE reaches the median of this pitchfork, we are going to have a pullback in SPY that is going to be sector rotation into the stay-at-home stocks. So we're going to go over the stay-at-home stocks right now. This is Alibaba, okay? Alibaba looks really good here. It looks really good here. We need to find an optimal time to buy. This is clearly a wave 1. This is an A, B, C correction, okay? So this count will be invalid if Alibaba ever goes below 211. Okay, that's definitely way far down, and I don't even think Alibaba is the best buy right here. But if we see from this low, we go from 211, and we go on a 1, 2, 3, 4, and now we're completing wave 5. Wave 5, remember, is at the very minimum the length of wave 1. Okay, so we go wave 1, A, B, C, wave 2. Now we go 1, 2, 3, 4. And what we're seeing is Alibaba is completing a wave 5 higher. Wave 5 at the very minimum is the length of wave 1, and then we're looking to buy a dip. Okay, so the very minimum target for Alibaba is wave 5, is the equal legs of wave 1 placed at the wave 4 low. This is the lowest that Alibaba can go, so we're going to say that Alibaba is incomplete until it reaches 284. Is there money to be made from 263 to 284? Sure. Okay. Is that the best way to go about this right now? I don't think so. Okay. The bottom line is that at a certain point, Alibaba is going to correct this 1, 2, 3, 4, 5 impulse. This is going to be a wave 1 from the low. It's going to go to about 284. And then what? We are going to be looking to buy this wave 2 correction. Okay? That's why I'm not quite sure getting into Alibaba right now is the best bet, because we really want to be buying, around the 250, 240 level for this wave 2. So what's this going to look like for Alibaba real quick? Remember, This is a large degree wave 1. Okay? Big wave 1 right here. Huge wave 1. This big correction, A, B, C, is a large degree wave 2. What we are looking for is that Alibaba is going 1, 2, 3, 4, 5 from this low, and that is a smaller degree wave 1. So once Alibaba reaches 284, that could complete a wave 1 from this low on the smaller degree, and then we'd be looking for a wave 2 correction. This, if we ever got Alibaba in the 250s, would be a massive, massive buying opportunity. Okay? The whole point is that at a certain point, Alibaba is going to present a fantastic buying opportunity the next time it hits 250. I expect that will happen after 284 is reached. So let's just recap. We have a wave 1 on the larger degree, and A, B, C correction puts in a wave 2. And then from this wave 2 low on the larger degree, we have a smaller 1, 2, 3, 4, 5 impulse that is being completed from this wave 2 low. This is going to make a smaller degree wave 1, and then we are looking to buy a smaller degree wave 2 the next time Alibaba reaches 250. If it reaches 250, remember, corrections in wave theory are not guaranteed to happen. That's why we don't short anticipated corrections. We have cash ready to buy dips. Okay? The bottom line, this is a large degree wave 1. This is a large degree wave 2. This is a smaller degree wave 1. We're looking to buy a smaller degree wave 2. At a certain point, Alibaba is going to present an incredible buying opportunity the next time it is in the 250s. Well, what's that mean? That means that the very minimum target for Alibaba at some point, I think this will definitely happen in 2020, because if we see the length of this wave 1 on the larger degree is from 324 to 1027, that's approximately 7 months. That means the minimum target for this larger degree wave 3 is going to be the length of wave 1 placed at the wave 2 low. That means at a certain point in 2020, we are expecting to be able to buy a dip to Alibaba in the 250s, and the very minimum target will be 360. And I stress that is an extremely minimum target, because that would only be wave 3. We'd have a shallow wave 4 correction. We'd expect a wave 5 higher. Remember, wave 3 is actually most likely going to be much, much further than the length of wave 1 placed at the wave 2 low. Okay? Wave 3 is actually at least 161.8% the length of wave 1 placed at this wave 2 low. The bottom line is, at a certain point, we're going to want to get into Alibaba. The ideal buy level is 250. What's that really mean? Well, Alibaba is a stay-at-home stock. If we want to buy Alibaba, then we need to look at other stay-at-home stocks and ask, is a similar theme emerging here? The answer is very clearly yes. So we want to buy Alibaba in the 250s. We don't expect we'll get that opportunity until this wave 5 on the smaller degree is complete. Remember, wave 5 is at the very minimum the length of wave 1. So the ideal kind of path for Alibaba is that it's going to go to 280, complete this 1, 2, 3, 4, 5 impulse, and then we get an incredible buying opportunity if it ever dips to 250 again in the future. Okay? So if we want to buy Alibaba, that's a stay-at-home stock. We need to ask, what about other stay-at-home stocks? Well, I've recently done several videos on Netflix. We talked about this massive, massive bull flag that is forming on Netflix, where we take the length of this move in time and price and place it at this low. Netflix has broken out of this bull flag. It's back tested this bull flag. So if 515 holds as the low, Netflix is going to go to 742. I think Netflix will reach 742 by May conservatively, because this is from 317 to 713. Okay, so this is less than 4 months. I believe that Netflix will reach the bull flag equal legs target of 742 within 3.5 to 4 months. Netflix is a stay-at-home stock. Alibaba is a big stay-at-home stock. Okay, if we want to buy Alibaba and we want to buy Netflix, we need to acknowledge that there is a rotation into stay-at-home stocks that will be happening at some point. Let's look at Amazon. Okay, this is a stay-at-home stock. This is also a huge component of the S&P 500 and many sectors within the S&P 500. If we look at Amazon, it has a massive bull flag. It's consolidated sideways into a gorgeous bull flag. Look at all this consolidation. All of this consolidation from 902 to 219. That's nearly 5 months, 5 to 6 months of sideways consolidation. Okay, it looks very clear from Netflix. We'll look at Wayfair and BJ as well. But it looks very clear that Amazon is going to resolve this consolidation higher. It is going to go the length of this bull flag in time and price from 316 to 831. That is a 4.5 to 5 month move. So in the next 4.5 to 5 months, it looks like Amazon has broken out of this bull flag, and it is going to go all the way to the bull flag equal legs target. In the next 4.5 and the next 5 months, we're expecting that Amazon will reach 4,803. So we think that Amazon is on pace to reach 4,803. We're not going to be looking to short the S&P 500 anytime soon. But let's acknowledge the theme here. We really want to buy Alibaba in the 250s. We really want to get into Netflix, honestly, now with a stop loss below 515. And now we see with Amazon, we can talk about the wave count right now. Okay, so there's a couple ways that people will count this. One way is they'll say, hey, this is a wave 1, this is a wave 2, this is a wave 3 up here, and then we had a wave 4, now we're looking for a wave 5 higher. Okay, I don't really think that's the proper count, but either way, at the very minimum, we're expecting another leg higher. Here's what I think it actually is. This was a wave 1, this was a wave 2, this was a wave 3, this was a wave 4, this is a wave 5, and we have completed a large degree wave 1 in Amazon. Then we complete an ABC correction, B, C correction to put in a wave 2 low. Then we go on another wave 1 and another wave 2. I believe in combination with this gorgeous bull flag, in combination with Netflix doing the exact same thing of breaking out of this huge bull flag and already backtesting this bull flag, in combination with Alibaba looking like it is in a great bull market right now with a minimum 6 to 7 month target of 360, that Amazon is forming a massive nest. We have a gorgeous bull flag leg 1. If we place that at the lower wave 2, the low of this bull flag consolidation, Amazon is going to reach 4,803. It's going to reach that in the next 4.5 to 5 months. It is going to go from the lower bound of this pitchfork to the median of this pitchfork. The bottom line, no matter how you count Amazon, it's got another leg higher coming. Okay, that's another reason we're not looking to short the stock market anytime soon. But this is a huge nest. A wave 1, a wave 2, a wave 1, a wave 2. Even if you don't believe in wave theory, even if you're like, oh, this is all voodoo. No, this is a massive bull flag, right? And that's another problem with only doing wave theory, is if you're counting this as a wave 3 and a wave 4, you're ignoring the fact that this is a great bull flag. And if we place the length of the first leg of the bull flag placed at the low of wave 2, Amazon's going to 4,803. It's going to do that in the next 4.5, 5 months. That lines up pretty perfectly with what we're expecting Netflix to do in the next 3.5, 4 months. Okay? So Netflix, Alibaba, and Amazon, we've proven, have a lot more upside. Okay? Let's look at another stay-at-home stock. This is Wayfair. Okay, Wayfair is another great example of a stay-at-home stock that formed a wave 1 and a bull flag, completed an A, B, C correction, and put in a wave 2 low. And now it is broken out of this bull flag, and it has already back-tested this bull flag. So I think Wayfair has much higher to go. Okay, Wayfair, if you're not familiar, is another stay-at-home stock. Are you seeing the theme here? Okay, at a certain point in 2021, we are going to have a massive rotation back into the stay-at-home sector. Okay, so that's another reason we're not bearish the stock market. That's another reason why if we do get a correction, we think it's going to be rotation into Amazon. It's going to be rotation into Alibaba. It's going to be rotation into Netflix, okay? But Wayfair, very clearly, wave 1, A, B, C, wave 2, it's broken out of this bull flag. It's back tested this bull flag. We are expecting that Wayfair will reach 548. So Wayfair will reach 548. The time target is 319 to 824. That's about 5 months. So in the next 4.5 to 5 months, we expect Wayfair to reach 548. That's a little interesting because we expect that Amazon in the next 4.5 to 5 months is going to go on a huge run. We expect that Netflix in the next 3.5 to 4 months is going on a huge run. We expect that Alibaba is in a massive new bull cycle where its minimum target is 360, and we're looking to buy any dip we get in the 250s if it happens. So what's the theme here? It's a stay-at-home stock rotation that we are expecting at some point after XLE reaches 51, after SPY reaches the median of its pitchfork. We are expecting that this back test is going to be sector rotation. If this back test happens, it's actually going to be very bullish. It's going to be sector rotation into the stay-at-home sector. Stocks like Wayfair, stocks like Amazon, stocks like Alibaba, stocks like Netflix are going to resume their lead. Okay, let's make sure we have the numbers for Wayfair. Wave 1, A, B, C correction. Wave 2, we break out of this bull flag, we back test this bull flag. Wayfair looks incredibly good to 548. I think a very tight stop loss for Wayfair would be 263. A wider invalidation level would be 222. Let's talk about Wayfair real quick in the long term. Wayfair could be a really, really fun one to watch in the long term from a shareholding perspective. Because if we look at this, very beautiful. Wave 1 on the long-term chart, very beautiful. Wave 2, we break above the high of wave 1. We form another wave 1 impulse, then a wave 2. So this is a great long-term nest on Wayfair. So that's just to say, Wayfair looks like it's going to have a lot more upside, not only in 2021 but beyond 2021. Same thing with Alibaba. Same thing with Amazon. Let me make sure we're back to the time frame we want, the 1-year time frame. So all these stay-at-home stocks are going to have a large move higher. Let's look at another one. This is BJ's Wholesale Club. If you're not familiar with this, pretty similar to Costco. This is pretty similar to Costco. Similar kind of sector as Amazon of this wholesale retail. This stock's big run was attributed to the stay-at-home movement. Okay, so BJ, same story as Wayfair, forms a gorgeous wave 1, which is also a bull flag. So even if you don't believe in wave theory, you can say this is the first leg of the bull flag. We have an A, B, C correction for wave 2 for BJ. So we are expecting that if this wave 2 low holds, then BJ has much more upside as it has broken out and back tested this bull flag. So we'll say an invalidation level for BJ is 36. A tight stop loss for BJ would be 40. And we are expecting the BJ, which is very similar to Costco, very similar to Amazon in the sense that they're wholesale retail. We're going to go the length of wave 1 in time and price, place of the A, B, C correction, wave 2 low. We've broken out of this bull flag. We've back tested this bull flag. We have a great pitchfork. Look at this reaction where the wick of the daily candle hits the median. Wicks of the daily candle hit the median. Great reactions on the median of this pitchfork. I'm expecting we're going to go from the lower bound of this pitchfork to the median of this pitchfork. We are going to go the length of the bull flag in time and price, place of the wave 2 low. That's going to take BJ's Wholesale Club, ticker BJ, to 64. The time target is that this was March 2nd to August 25th. That's about 5.5 months. So in the next 5 months, we expect BJ will reach 64. In the next 5 months, we expect Amazon will reach 4,803. In that same time target, we're going to expect that Wayfair is going to reach the equal legs bull flag target of 548. And we take the length of this wave 1, we place it at the wave 2 low. That's how we get our price and time target. Okay, all of these stocks are stay-at-home stocks. Netflix, we've gone over ad nauseum. Great upside for Netflix. Alibaba is in a new bullish cycle as well. Okay, these are all stay-at-home stocks. So what I'm expecting is that once XLE reaches the median of this pitchfork, once XLE at the very minimum reaches 51, once SPY reaches the median of this pitchfork, we are going to have a pullback that will actually be an incredible buying opportunity to get back into the stay-at-home sector. Let's look at the poster child of the stay-at-home movement. This is Zoom. I believe that Zoom has completed an A, B, C correction as well from this high. So this is an A, B, C correction for Zoom. If we take the length of wave 1 in time and price, Zoom is going to go from 527 to 1019. That's a 5-month run. So in the next 5 months, and the next 4 months, and the next 4.5 months, I am expecting that Zoom will go the length of wave 1 in time and price, placed at the wave 2 low. That's going to take Zoom to 770 this summer. Okay, so Zoom is going to reach 770 this summer. Alibaba has more upside, at the very minimum to 360. Amazon's going to 4,800 this summer. Wayfair is going to 548 this summer. BJ's Wholesale Club is going to 64 this summer. Netflix is going to 742, by June. Okay, these are all stay-at-home stocks. Let's do a real quick analysis of Zoom from a wave principle standpoint. We see if we have 358 hold as the low, I think that's a pretty good stop loss. The invalidation level for this is going to be 331. So if Zoom's above 331 to 358, that is going to be our wave 2 low. And we go the length of leg 1 in time and price, placed at the low of the A, B, C correction. Zoom is going to go to 771. Okay? I really like Zoom. I really like BJ. I really like Wayfair. I really like Amazon. I really like looking to buy dips in Alibaba. Okay? One more stay-at-home stock. I tweeted about Peloton. I said Peloton completed an ABC correction. If we take the length of leg 1 in time and price, place it at the wave C low, that's going to take Peloton to 169 in 2 months. Lo and behold, that did happen. So Peloton has reached the equal legs target of 169. What happened basically as soon as we reached the equal lines target, we had an ABC correction. Okay, so from a classical trading perspective, Peloton looks incredibly good here. If we take this low, connected with this high and this low, then Peloton has formed a classical definition of a cup and handle pattern. It's completed and A, B, C correction. And now if we take this low, connect it with this high and this low, we have a really nice pitchfork. We have really nice reactions on the median of the pitchfork. And now we have a buying opportunity off the lower bound. So I think right now, the invalidation for Peloton is going to be all the way down here to 109. That's obviously too wide of a stop loss. But we have completed an ABC correction. So in wave theory, you can look at the high of wave D. It's a really good place to buy dips in the future. We are retesting this wave B high right now. So we'll say that a stop loss is 132. The problem is if 132 was reached, that would also be another great buy point. So I will update Peloton if we break below 132. I will update Peloton on my Twitter account if we go below 132. But right now, I think there's a really nice risk reward setup where if we go the first leg of the bull flag and place it at this low, then Peloton is going to go from the lower bound of this pitchfork to the median of this pitchfork. From a classical trading perspective, this is a perfect cup and handle pattern. So I love Peloton here. I love buying dips on Alibaba. I like Zoom. I like Amazon. I like Wayfair. I like BJ. And we've gone over Netflix ad nauseum. I love Netflix. What do all these stocks have in common? They're stay-at-home stocks. Okay? So at a certain point in the future, XLE will reach 51. It will reach the median of this pitchfork. Crude oil is going to have to pull back at some point. Once it finishes this wave 3, it's going to have to pull back and complete a wave 4 correction. SPY at a certain point will reach the median of this pitchfork and it's going to have a pullback. Is that pullback going to be Armageddon? No. It's going to be sector rotation back into the stay-at-home sector. Okay?